Hi, JJ here with The Art of Value. Welcome. Well, today I'm going to talk about Alibaba again, the second video this week. The first one was on the full year earnings update. This one's on the individual business segments. There are a number of business segments within Alibaba and they're planning to spin them off. And so what are these units? What do they do? And what are their prospects? I'm going to get into that today. As I said in the last episode, the company's CEO, Daniel Zhang, talks about how Alibaba is going to be transitioning into a holding company focused on capital management. He said that under this new model, each business unit will operate as its own company with its own CEO, its own board, and be responsible for its own performance. They've announced that Alibaba intends to spin off the Cloud Intelligence Group into its own company, and this will happen within the next 12 months. The board has given approval for this already. Daniel Zhang, as it happens, will be chair of Alibaba and also head of its cloud segment. When talking about the recent financial results of the cloud group, they mentioned how growth has been declining, and that is thought to be, they didn't say this, but ByteDance has gone off on its own, producing its own cloud, managing that, and that was a huge customer. You can imagine TikTok would be a huge user of cloud. So that is believed to be part of the decline. Whether it will pick up again, maybe not, we don't know, we'll have to see. It would be surprising if growth slowed down considering all the AI action going on around the world, which needs a lot of cloud infrastructure and operations. In fact, he said despite the challenges, Alibaba Cloud is focusing on new opportunities, including the wider application of AI and models as a service. And surprise, surprise, Alibaba's recently launched a ChatGPT-like AI service. Zhang said that the goal of the cloud business is to make powerful computing more accessible to small and medium-sized companies and developers. He said that Alibaba Cloud aims to leverage its economy of scale to pass on tech advantages to its customers. It's going to focus on public cloud, infrastructure as a service, and software as a service. Zhang added ambitiously that they'd like to see Alibaba grow to be as big as Alibaba Group is currently, just as its own business. As I said in the last episode, the board's also approved plans to go ahead with a fresh Hippo IPO process, which should take about 6 to 12 months. They're also aiming to explore a Cainiao IPO within the next 12 to 18 months. So they're really getting on with this process of thinking about and planning for IPO after IPO over the coming years. Now to other segments. The China commerce segment is the largest, accounting for 65% of overall revenue and 152% of adjusted EBITDA, which means that it subsidizes the other loss-making businesses. The China commerce business includes brands like Taobao, Tmall, Fresh Hippo, Alibaba Health, Taobao Deals, and more. As I said in the last episode, and go back to see if you want more detail on that afterwards, that despite really modest growth, it's improved profitability significantly and really good cash flows. If you're getting value out of this episode so far and you're watching on YouTube, I'd really appreciate it if you hit that like button. Now to smaller segments, the international commerce segment, which represented 9% of overall revenue in the recent quarter, but had a growth rate of 29% as well. That was largely due to the retail sector, which was up 41% in the quarter. So despite being loss-making, the segment is reducing its losses and it is one of the faster growing segments. So this segment includes brands such as Lazada, AliExpress, Alibaba.com, and Trendyol, a Turkish e-commerce business. Next we have local consumer services, which represents about 6% of revenue, so smaller again, but also experienced a 17% growth rate. This segment's heavily loss-making with an EBITDA margin of minus 33%, which is actually an improvement from the same quarter last year at minus 52%. This segment includes Ele.me, which is a Uber Eats type of product, so it'll be competing with the likes of Meituan, and Maps, which is a Google Maps type of product, and they do sell that to auto manufacturers. Next is Cainiao, which is Alibaba's domestic and international logistics business. It represents about 7% of revenue, at least in the last quarter, and it's nearing its break-even point. After intersegment elimination, which means the trading between its own Alibaba businesses, the revenue was up 18% for the quarter. This was primarily due to higher revenue per order, but also for greater demand. Fully 72% of revenue in this segment comes from external customers now. Now the cloud segment, which I've already talked about, represented about 9% of revenue in the last quarter and includes Alibaba Cloud and DingTalk, which is kind of like a Slack for China. So previously very fast growing at over 50%, this revenue dropped 2% compared to the same quarter last year. We already discussed reasons for that, TikTok probably being one of them. So it's going to be interesting to see when they spin this off whether revenue picks up again or whether they can get those big growth rates. Investors will be looking at that. EBITDA margins improved slightly to 2%, coming in higher than 1% last year for the same quarter. And full year revenue was up about 4%. Now we have even smaller segments, digital media and entertainment, which holds Alibaba Pictures and Youku, which is like a YouTube for China. This segment represents about 4% of Alibaba's revenue. It's experienced a 3% revenue increase and losses are narrowing. And EBITDA margin improving from -25 to -13. Next we have innovations and other initiatives, which represents about 0.3% of revenue. So this is reminiscent of, say, Amazon, where they start businesses, throw things against the wall, see if they'll stick, and Google does similar things. I think everything gets kind of lumped into this category like that. So only 0.3% of revenue at this point, but it did experience a 47% increase in revenue. But EBITDA margins were severely negative at -325%, which you'd probably expect in a sector like this. It's a pretty small part of the overall revenue, but if one of these businesses work, if something they try, just like Google, if it works, or Amazon, if one of these things works, it could be highly profitable and turn into a big business one day. I'm thinking of AWS here, Amazon's cloud business, which started from nothing, was a bit secret for a long time. And so one of these businesses could come out of a segment like this. We just don't know. Okay, that's the full Alibaba. It's going to be interesting to see some of these segments IPO in the coming years, whether they'll be profit making in the future, how much money will have to be raised and pumped into them to make them profitable, and how they'll do in the future. Especially with Alibaba Cloud, it's going to be interesting to see if growth can be reignited there. TikTok has left, but you'd have to think with AI and so much infrastructure and services in the future that would start to grow fast again. We'll have to wait and see. We don't know. There's no guarantees on that. As I said, 6 business units with their own CEOs, their own boards responsible for their own financial futures being spun off in the coming years. It's going to be really interesting to see what happens. As I said at the beginning, this is the second episode on Alibaba this week. People on YouTube, I'm going to put the link to the first one up here if you haven't seen that yet, about the overall earnings and overall Alibaba situation at the moment. Thanks for watching or listening, and I'll see you next time.